Ooh, Splunk, guys. SPLK, and I believe that is on the new NASDAQ technology software. But I think August 24th, 2 months ago almost, I did a podcast on that, and I think let's go on the monthly. I had a stage 2 continuation breakout right here in progress. Everything was looking super duper. And don't need much, guys. Candles, a few candles here. Tuck, went down. Crazy candle going down in progress right now. The whole situation is reversed, and we gotta wait for the end of the October. This is the latest monthly defined support I have. 90, 96. It closed below that. What do we get? Oh, total meltdown. So from a stage 2 continuation, I think it was Secretwars episode 175. And now instead of that is this type of crazy target is going to bring us back down to the previous breakout line, what I call a wall, previous resistance turn support. I love those targets because the symmetry of it, there's no hard spots, there's no resistance support along the way, except this can be strong support here. So it brings you all the way down here, and but first you need that close below the 96 level, and I would trust it more if we had something like that, a close maybe above. Oh, where's my drawing tool? Yeah, like that. Maybe make it head and shoulders type of formation, and then maybe look, it surprised me that we go straight right now. This is like scary stuff, but I think there's a bounce back, and that's not gonna quite reach the previous high, and after that start having action closer to the 12-month average, getting lower and lower, and then after that we break down. But you never know. We're gonna go head out to the weekly, and I'm pretty sure we're going to see some details making it look like it's going to be a fast stage 3 that's already starting to turn into stage 4. But you don't want to be in the stock when the 12-month moving average is going. You don't want short stock when the 12-month average is going upwards, but you don't want to short a stock until the 12-month moving average is starting to decline. Make sure that trend is really in your favor. So that's just the first step, is halting the angle of the moving average going upwards, starting to flatten out, and the more you have price action below it, then you have a real valid trend on the monthly candle chart. So that's most I see it. If you get in here, if you don't wait for that monthly close, then the price action most likely is going to go back up, and these are monthly candles, and I don't know where you're going to put your sell stop, but you're going to have to put it super high, and if you put it super high, you're probably going to have a small position size, or else the bounce back is probably going to wipe out a lot of sell stops of people who want to try to short it right here. Remember, when everybody starts getting scared, sometimes it's the opposite that happens. Listen to the chart. Try to be objective. You've practiced. You know exactly what you're looking for. And I always try to draw it out. And since I've been drawing out my little pencil tool, I get to imagine a little bit what could happen. And it gives me a fresh perspective instead of, I need to short, it's going down, I don't want to miss the train, it's going down here. There might be just a bit more churning ride before it actually crashes, guys. So I got to watch out for that. All right, let's head down to the weekly. Let's remove, let's remove all trend lines. 96 is my monthly defined breakdown line. My weekly defined breakdown line, it's at just a little higher at 98. So weekly close below 98, which we have, is a weekly defined breakdown, but we still have that monthly close at 96. So we really need that close. It has to stay below the 98. It has to go below the 96 for the end of the month. So here, this is what I call the whips, where if you don't respect the higher time frame, here you have a chance to whipsaw. Because, Pat, I'm going to short it close below the weekly. Well, there's that monthly defined support, and that might actually, you might start shorting here, and then the monthly defined decides to bring the wick, and this is just going to be a wick on the monthly. So the price action, still coughing, help me. Price action could go back up in the next following weeks, and then you finish October on top. So the Ichimoku Cloud support could help that price action go back above the weekly defined breakout line, and then you get whipsawed or you're trapped, guys. You have to wait. 30-week average starting to go downwards. You're underperforming the SPX. It's declining. Your red zone. So this is really the beginning of a stage 4. But we still remember weight of evidence. You want to be below the Ichimoku Cloud. All that Ichimoku Cloud defined support. You want to be below the monthly defined breakdown line, and then you get in. But look, you have a lot of weight of evidence. I don't know how many I enumerate, but you have a whole bunch. That's not good. Crazy red candle on a down day like that. That's not good. So they're all starting to add up. If I'd be a bull Splunk, I'd say to myself, sorry, the last line of defense is the monthly defined breakdown line at 96, the Ichimoku Cloud. You have to go through that, and after that, it's free fall all the way back to these 66 levels there. Because this is how I imagine it could happen right here. Goes down, maybe go test 3-week average, and then after that, go down here, and then after that, here's going to be the short. We're going to want to wait until it closes below 90, 89, and then after that, it's going to go down. But it's not looking good, guys. It's not looking good. Opportunities after that, maybe the short would be eventually if it breaks below here, either you short on whatever pattern we have here, or you wait for it to pull back close towards 30-week average, close towards that 96, 98 level, the breakdown line, which was support and alternate resistance, a wall. And remember how I like identifying them. And plus you have the confirmation of lower highs, 30-week average protecting you, previous support and resistance protecting you. You're below the Ichimoku Cloud, and here would be probably the optimal shorting scenario right here, unless it's a total meltdown and goes down right here. But what do you want? I'd rather wait for the wave of evidence. There's two ways to minimize, to protect your NAV. Always never risk more than the 1% or 0.5% per trade on your initial sell stop, and just avoid those losses by just being more selective. Stan always says A++ setups. Well, A++ setups, guys, and this is an A++ setup here, playing a short on the pullback right here. Until we get to that situation where we're perfectly placed, like a boxer is going to wait for the best opening because the opponent has his guard down. He has the correct angle because he managed to place him in that correct position for that right hand. Well, this is our right hand. Our knockout right hand is right here. Until then, well, this is just fun. So keep an eye on it. Splunk, I'd like to short you, but it's just not time yet. Just not time yet. I think there's going to be a bounce here before there's a total meltdown. All right. Thanks, guys. Hope you like it. Subscribe.